Okay, MegaWhale team, welcome back to our channel. Thanks for tuning in. If you're a new subscriber, welcome to the channel. It's always great to have you guys here. If you don't know what we do, we provide analysis on Bitcoin and other cryptocurrencies, including a variety of altcoins and Ethereum. All our updates are based on data and technical analysis. We don't tell you what we want to happen, we tell you what the data is suggesting. With that being said, we've got a lot to cover today. We're taking a look at Bitcoin, of course, and a lot has happened in the last 24 hours. We've seen a significant crash, we saw a pretty strong bounce, and now we're seeing a bit of consolidation. The purpose of today's video is to go over, of course, the macro situation. We're going to be going over our bullish and bearish invalidation points. We're going to be talking about our validation points. We're going to be talking about the breakdown and why it failed and why it didn't go as planned. We're also going to be talking about how technical analysis sometimes doesn't work, and we're going to be talking about what we actually need to see for the price to continue upwards through this resistance block and potentially rise to 42 to 44,000. And finally, we'll be taking a look at the DXY and talking about how the correlation of the DXY is somewhat inconsistent with the price action of Bitcoin in the last 24 hours, and interesting to note. Before we get into it, remember to like, comment, subscribe. If you have any questions, obviously leave them down below. You can contact me on Twitter, Telegram, and obviously YouTube. And I just want to announce that tomorrow is actually my 5th year in cryptocurrency. Before that, I was doing gold trading and Forex. This is number 5, my 5th year officially tomorrow when I bought my first crypto. Obviously that was, of course, Bitcoin. And we're going to be doing a little bit of a giveaway to celebrate. So we're going to be doing a bunch of discounts for our VIP channel. We have a cryptocurrency trading channel, VIP, on Telegram. You can see it on the left-hand side of the screen here. We have nearly 400 members. If you're interested in joining from tomorrow, about 11 a.m. GMT Australia time, so Thursday, we're going to be opening a discount code. A limited number of people can join up with the discount to our VIP. If you're interested in getting in, that is the time. With that being said, let's dive right into the video. So of course, we're going to start with taking a look at that macro environment. And Bitcoin is very much still in the same pattern it's been in basically the last 3 months that we've been talking about. It's still a bearish pattern. It's still an ascending channel. It is naturally a bearish pattern in the sense that it primarily breaks to the downside. It has a very higher rate of downwards break than it does to upwards break. Just as we've been saying before, it can break upwards, but the probability is very much skewed towards the downside. And generally, a downside break, which we saw here, is an incredibly strong sell signal in comparison to an upside break when you're looking at ascending channels. If we invert the chart, we can see a similar thing. We are very much, guys, in a bull flag formation here, indicating a rise in price. So we've talked about extension targets in relation to this macro pattern right now. If you want to talk about those, if you want to find out what it goes, watch our previous video. I think it's the one with like 2,500 views. The most recent video we posted on Bitcoin, the one with all this video absolutely blew up. Thanks to everyone watching and support. I really appreciate it. But if you want to find out more about bullish and bearish targets, that's the video for you. If you're here to talk and find out more about the process between those targets, this is kind of what we're doing today. So for us to be bullish again on the macro, and we have to just differentiate for people new here who don't quite understand, you can have short-term bullish price action, and then you can have large time frame bullish price action, or macro. For us to be macro bullish, we need the price to cross the 200-day moving average on the daily chart, which is this yellow line. We notice back in history, every time the price crosses this 200-day moving average, we have a strong impulse upwards, a strong rally upwards. That is our bullish break, all right, for the macro time frame. For the short-term time frame, the price needs to break over the 100-day moving average. We get rid of the 200. We can see every time we break over, well, most of the times when we break over the 100-day moving average, we end up starting or initiating an uptrend. The question is, will that uptrend continue? Usually if it breaks the 100 and then breaks the 200, we have a continued uptrend. Sometimes we'll break the 100, go up, reject from the 200, which we saw here in March. And then sometimes it just won't pass the 100. So the first step for us to actually reclaiming this bullish momentum is to break above and close a daily candle above the 100 moving average on the daily chart, which is 41,250 US dollars. All right, we're just underneath it. We're tackling it now. We're getting rejected from it. This is where we need to get above. If we get above this and close a candle above it, we can definitely see a move upwards to 44,000. I'm going to talk about why we can see that in a second. So that is our bullish scenario. All right, we're going to talk about our bearish scenario in a second, but we're going to focus this bullish version first, and then we'll talk about our bearish. All right, so if we go down to a smaller time frame, we'll go to 4 hours, we can see that we have broken out of a descending wedge. And a descending wedge is obviously a bullish pattern. It's a downwards consolidation with an upward break. All right, and we have this breakout point obviously from these points of rejection or points of resistance, and this is now our third point with our breakout here on our fourth. Pretty important breakout. Obviously, we have 3 major points of retest. All right, and our second and our 2 at the bottom. So this does confirm a wedge. We need 3 major retests on one side and 2 major retests on another side to confirm that we are in fact in a wedge. So we are in a wedge, and we broke out. Plus, we saw a bullish divergence over here on the RSI, suggesting it is quite a strong move upwards. So that is our bullish scenario here. We need to break that 41,250. We can head upwards and obviously continue to 44,000. I'm going to show you why I say 44,000 here. So just as a ascending, or should I say descending wedge, we have an ascending wedge, just an inverted option. It's easier to sometimes look at these bullish price actions as retracements rather than extensions. It can be a little bit easier to digest downward price action than it is to digest upward price action for some people. So I like to take a look at both to kind of fulfill the learning requirements of both people and different types of people. Personally, I actually prefer looking at inverted charts. When I look at extension moves or moves upwards, I find it a little bit more refreshing, and it helps me delete any potential bias I may have. So we can take a measured move from the first retest of the wedge to the top, and we can apply that to the breakout point, which indicates from here we could push downwards to a maximal into this resistance range, but at least hitting $44,000 on the way up. So that's how we take our measured move target from the wedge. We can do a conservative measured move target from the wedge, from the top of the wedge. Again, very conservative, 43,200, taking us to this resistance level. And if we flip it again, we can see exactly where that is. This will be this upper resistance level right over here. All right, so that is how we're taking our analysis here. But of course, for any of this to even be valid, for us to even consider any of that, we need a daily close above 41,250, above 100-day moving average on the daily. All right, so that is what happens if we close above that. So that is our bullish scenario. Of course, the bearish scenario is that we are faking out here. This is a bear trap. We get rejected and we fall back into this wedge and push downwards. We're going to be talking about this now. We're going to be talking about it in a lot more detail. So hang in there. And if you're still around in the video, awesome. Thanks for sticking around with 7.5 minutes and 8 minutes in. I'm going to try to keep this video under 15 minutes a day, so you're halfway through. And if you have any questions so far, just leave them down below. So big question is, why did we continue upwards here? We said, of course, from the top, from 47,000, we said we're breaking down, we're heading down to 39,000. That happened. But we also said, if we break 39,000, this is what trips a lot of people up. I also said, if we break 39,000, we're not going to push back over it. And unfortunately, I was incorrect. And it happens. Technical analysis is not always going to be correct, but look how much better of a position we are in from this technical analysis. We've saved ourselves a very significant 15% drop because of this analysis. So sure, maybe that last little bit was a little bit off, but it doesn't invalidate everything else that we've learned, everything else that we've got from that. It's super important we keep that in mind. And I think I want to just pinpoint one more thing. Technical analysis, although is very, very beneficial, and I trade primarily on analysis. I've been doing technical analysis many, many years, 7 years now, and I've traded and made a lot of money from purely doing technical analysis and purely using that to inform my decision making. It is not always correct. It's just a reality. There's always going to be the chance of the price moving opposite to what the data suggests. A lot of indicators in technical analysis and a lot of data we get is lagging data. So sometimes it's very hard to predict these movements in absolute precision. And oftentimes, you can have fake outs, you can have manipulation, you can have traps, you can have liquidity scams. All these things that technical analysis cannot predict can happen. And I think this is what we've seen this time. We didn't expect this to happen, yet it happened. And we're in this scenario now where we just have to accept it and make the most of it and figure out, what from here. And that's a really important mindset you need to be in as a trader, is what has happened. You need to plan and you need to be aware, and then you need to make a new plan. So if anyone's, in the market, you know, like freaking out, like, oh, we broke down, you know, and we did break down. I'm not gonna lie, guys, we broke down, and we broke down heavy. All right, this is not a weak breakdown. We had an incredibly strong sell signal when we lost this ascending channel support. I'm talking incredibly strong. Not only did we have that strong sell signal from losing the ascending support, we lost to 200 on the 3-day. All right, we lost to 200 on the 3-day. We had probably two of the strongest sell signals you can get on a technical chart. We had both of those at the same time, and yet the price bounced. And that's what I'm saying, guys. Always need to make sure you have your invalidations, you trade with good risk management, and you're always aware of both scenarios. And I think this is why I really instill in you guys, you know, my followers, the people who watch this video. When we do our videos, we always make sure we have our preferred direction, not biased direction, but we have our direction that we think is more common, and we kind of push the video in that direction, talking about the probabilities of occurring. But we always mention the other scenario, and we always say this is the other potential, we're watching out for this. If it reaches this level, then it's more likely to occur. Be aware, because it's really important in crypto that you do that, because if you're not, you're cutting yourself at your feet. You're almost cutting out half the story and just hoping you're correct, and that's just not how you trade, guys. It's called gambling. So moving on from there, guys, we're gonna be taking a look at, you know, what do we really need to see for this price to pump upwards here? And we're going to look at some technicals of that. So obviously starting on the MACD, we're going to start on a 3-day chart. And of course, yes, we lost that 200-day moving average, but guess what, guys? It's now acting as a major support. Once again, 39,000 is acting, I think it's moved up a bit now, 39,000, even 40,000, sorry, is acting as a major support again. All right. If we lose that level again, exactly the same assumed thing will be occurring. We assume we will be crashing very heavily again downwards unless we reclaim 41,250. All right. Technically, nothing has changed. Technically speaking, nothing has changed from our last prediction before this crash. We were saying the same thing. All right. Last prediction before this crash, we were up around over here. We said exactly the same thing. It crashed. It's back over here. We're saying the same thing again. Unless we get given a reason to be bullish, there is no need to be bullish. We are preferring, and we are more aware that the downside scenario is more likely, and we're sticking with that until the chart gives me a reason to be bullish. Right? And I'm not just talking about a short time frame RSI divergence or a MACD cross, which is under the neutral level and under the 200-day moving average at the same time. That's not a good enough reason. We want a tangible reason. A tangible reason is the 100-day moving average cross, daily close, push over this resistance range. That is a tangible reason to then turn our attention to short-term bullish. All right. Let's take a look at the DXY. We've done a lot of talk about Bitcoin now, and I hope you guys understand where we're going with this video, and I hope this made some sense. If you want to go check out our last video, I highly recommend looking at our last video. I'm just going to talk a lot more about the bearish scenario. Today we talked a little bit more about bullish, what we need to see to be bullish, you know, 48K, 41.25K, these critical levels of validation for bullish trends. And we talked a lot about our bearish targets in our previous video. If you want to find out, you know, where we think we could bottom out if we go into a crash, and why it's more likely we're going to crash, obviously with the state of the global economy and all these different various factors, and we show you how we actually come to our prediction in that video. It's a long video. It's a 25-minute video. If you got the time, I highly suggest you go educate yourself and watch that video. It can only benefit you and only put you in a position of strength. Let's take a look at the DXY. So the DXY has been pumping pretty significantly, and we noticed this a while ago, actually in March even. We noticed this breakout of this long, I think it's 21 years, I think, guys. There's an old chart over here, 21 year long symmetrical triangle. Let's zoom out even further. It's huge chart. Here we go. 21 year long symmetrical triangle breaking upwards at this rejection point. We broke straight up $100. What does this mean? And you know what? I'm not going to do another 50-minute video talking about this. What I'm going to show you real quickly, I'm going to talk about it a little bit, but I do want you to just come over to the channel, and if you want to find out all about, it's this video, how interest rates will affect Bitcoin and other risk assets. About a 20-minute video, I talk exactly all through the nitty and gritty about how increasing interest rates affect assets such as cryptocurrency, the housing market, yields, how that's going to affect obviously banks, and then how that's going to affect you as an individual. All right, we talked all about it, gave you all the data, and obviously I have background in economics, taxation, and finance, so I've got a little bit more detail and information in those areas than most people. So go ahead and watch that video. But in essence, the DXY is showing the strength of the US dollar. All right, when people sell risk assets, they usually convert that money to cash. All right, particularly companies. A lot of companies, when interest rates are low and have been very low, they use debt to accumulate assets, whether it be residential property, whether it be stocks and dividends, whether it be cryptocurrency. They use debt, and often they over collateralize their debt to acquire assets, all right, which pumps up their balance sheets and makes their future earnings on their balance sheets look more favorable. All right, if you don't know already, stock price, share price is based on future earning value. All right, they evaluate the future potential earnings of the company and they value the stock based on that. All right, so what happens? Interest rates rise, money comes out of stocks. All right, the reason money comes out of stocks and crypto and these risk assets is because these companies who have taken loans out to acquire these assets now have to pay more cash back to the banks, all right, back to the lenders. All right, what does that mean? It means their cash flow statements, all right, or their available cash, or the debt to cash ratio has decreased. It decreases, which makes the stock look unfavorable. All right, if the stock looks unfavorable, people sell it because it's based on future earnings. All right, so how do they keep their balance sheets looking liquid and looking good and keeping their future earnings up? Well, they sell their risk assets, and that is what is happening. They're selling their risk assets into dollars, and that is why the DX is moving up. Why should you care? We talked all about that in another video, but it is not good for crypto. It is not good for any other risk asset. And in reality, I can't say for sure it's not amazing for crypto. We don't really know. I can assume based on classifying crypto as a risk asset, it's not good for crypto if we put it in the same category. But at the end of the day, crypto or Bitcoin or whatever has never been through an economic recession. We saw crypto in 2020 May COVID crash, black swan event. All right, irrelevant. We can't really apply that into our data. But as for an economic recession, we haven't really seen how cryptocurrency will perform. Will it follow risk assets down, or will it break away from the market and find its true value as a stable place to hold value while the economy crashes? It's too soon to tell. It's really interesting. I'm really fascinated about how all this stuff works. And of course, if you've got any questions, leave them down below. I'm happy to talk to you guys about this all the time. It's a passion of mine, so leave them down below. Anyway, I hope this video is very helpful. I said under 15, we're about 18 minutes, so sorry guys, a little bit of a long one. But like I said, VIP sale on tomorrow. We're going to give you nice big fat discounts. Head over to our cryptocurrency free Telegram channel in the link below. Wait for the information. We're only opening limited amount of spots, but you'll be very happy you jumped into it. That being said, thanks for tuning in. I'll catch you in the next one.